So, Jarand, you just presented what you're saying is a new theory of value creation for companies. It's got 5 elements, but I was really struck by something that you said around the potential for oil companies, for those active in the oil markets, to still be able to create an immense amount of value, even if we see here at Rystad that oil demand will eventually plateau and then drop off. So tell me a little bit more about what that opportunity looks like, even if the market maybe isn't as large.
Yeah, I think I said that in 100 years from now, we will still have a significant oil production. I think maybe 25 million barrels per day in 2120.
Okay.
But that will not be the energy industry. It will be a material industry. We will use those molecules, which is very valuable molecules, to produce, I think, primarily different plastics, but also lubricants, asphalt, roof cover, etc. There's different products where the oil molecule is very, very competitive still, even in 100 years from now.
So all of these things that we need every day, and what does that company look like that's able to capture that value?
I think for the upstream part of the oil business, it will be a slow but cyclical kind of peak and decline for the next 100 years. But this cyclicality will create a lot of opportunities for value creation for oil companies, just to say that. So we have seen, when we're doing this system dynamics modeling of investment cycles in the oil industry, due to the very, very fast decline of well-level production, you always have to invest even to stay flat or to decline a little bit. So that's why we'll continue to see investment cycles in the oil industry. And we need to discover a lot more oil than we have today to be able to maintain this. But let me also say that from a climate perspective, this absolutely goes together with a target to get to net zero. Okay. Because the materials are not directly a climate problem. It could be other problems, and we should very much focus on the plastic waste problem, etc. Should not underestimate that. So that's a different topic, I think, how to deal with that. But we can well see this happening for, as I said, from a climate perspective.
And compatible with our climate goals, no less. And so
it could be.
I did want to follow up on something. I mean, it seems like this theory, it assumes that markets are rational and efficient, and that's not always the case necessarily. And so particularly as we're seeing trade barriers put up, or countries saying, okay, we don't want to buy cheap, very efficient technology from China. How does that factor in? I mean, how can we make this work with a world that's quite messy?
No, I think these 5 forces I presented today are influencing the energy market. All of them are based on kind of economic logic. And basically for the structural force, for example, you will over time choose the technology that is better and cheaper. But policies and politics could influence those prices and those selections on the margin. But longer term, typically the technology is trumping all kind of other influence. You see, even if some geographies had some privileges to steam locomotives for a long period, they didn't survive in the end. Steamships, the same. A lot of applications will eventually die, even if politics are trying to kind of extend the lifetime. So this is for the long-term structural shift. For this cyclical, that is over-investments, under-investments. Of course, also there's policies might influence the pace of that. But over time, as I said, economy is trumping politics, and I described the economic logic that eventually will force this. So I think it is actually politics is incorporated in the theory.
Okay, so essentially it's technology, and it's that pace of technology and that trajectory of technology.
And processes and kind of human behavior in a way that are driving these shifts.
So while we may be temporarily illogical, eventually that logic returns to markets.
Yeah.
That's really interesting. Now, I mean, we're here in the US, huge market for Rystad Energy. I'm really interested to know, I mean, where you see some opportunities for Rystad here. What's exciting for you here in the US that we can tackle?
Yeah, I mean, it's the largest economy in the world. It's the largest energy consumer. Of course, it's the most important country for us in Rystad Energy. And we will continue to grow here. And to describe this very complex energy market that we are in the middle of and that we will be facing also shifting a lot going forward. So we will focus both on actually describing what is relevant for all of these 5 forces I mentioned, which is from the structural changes that we see. When can that happen? What is competitiveness for the different technologies, etc.? So trying to have very precise estimates on cost, on the technologies, etc., and long-term forecasting of oil supply and demand, gas supply and demand, coal supply and demand, to the power supply and demand. And for the power sector, trying to be more and more down to also the forecasting and the no-casting, meaning that see how also the short-term energy markets will be influenced by forces like weather forces and outages, and even the daily cycle and the influence of batteries, for example, in this market. And to navigate in this market, you need to have a precise intelligence as a player in the energy market. We have already very good experiences from, for example, using satellite photos to understand shale well drilling, whether it's a drilling or a fracking operation that is going on. For example, we have been monitoring more than 25,000 well sites using satellite photos. We have the similar ambition for everything related to the energy market, to be able to monitor what is really going on today, tomorrow, next week, weather and infrastructure, to be able to give a very precise no-casting and forecasting for our clients. So I look forward to be a part of this also for the next decades here in the United States.
It sounds really exciting. I mean, speaking of forecasting, what do you think if we're sitting here 1 year from now, and we will be sitting here 1 year from now at the next Houston Summit, what do you think we'll be talking about?
Yes, I think first we are actually in a slow downturn in the energy market as we speak. Oil prices is weak, gas prices is relatively weak also, and the power prices are variable, and there's a lot of confusion on what is happening. So there's a lot of hesitations to take decisions. So actually, and I think it will not be better next year. It might be even worse.
Really?
Next year, yeah. But after that, then we will see the bottom of this cycle, and we will see a new investment cycle coming in most of these commodities and the energy commodities that we see. Because the slowdown in investment that we are seeing now in some sectors will have the effect of shortage of supply, but that will be visible especially in 2027 and 2028. So then I see a big boom happening. As I said, next year I think we will continue to be in this more moderate, enthusiastic atmosphere in the energy market.
But looking forward to that next couple of years of upcycle, and we'll certainly be discussing that, I'm sure. Jarand, thank you so much for joining us here on the Debrief, and I look forward to having this conversation again next year.
Yeah, thank you.